If you trade stocks and options, you have to watch this video. If you trade Forex or cryptos the majority of the time, the information in this video doesn't apply to you. And here's the great news. I will give you a piece of information that will literally change your trading as you know it if you are a stocks and options trader. What I can do is in this video give you insight into the matrix of the market, and most importantly explain why something happens before it happens, give you the feeling behind it so that you can make more money in trading. And I'm gonna do that entirely for free, and this video will change the entire way that you view stocks. You ready? Cool. We're talking about gap action. Gaps. I love them. They're so cool. In the stock market, I'm sure you all know this, but just in case, the markets are actually not open 24 hours like they are in Forex, futures, and crypto. So very often you can get pretty unique and interesting gap movement. Gap movement happens when the markets are closed and new pricing comes in and new information comes in, and that moves the market generally at night or early in the morning. When you know what those gaps mean and how to interact with them, it gives you a timing mechanism that's so filthy and dirty. It allows you to print cash. All right, Spotify, random chart. It's up on my list. And what I'm going to do is I'm going to walk you through the gap sentiment. In my opinion, there are only 4 types of gaps. And in fact, if you're here, make sure you go over to reallifetrading.com, which is the sponsor of this video, reallifetrading.com. Thank you. This guy is so good looking. Scroll down all the way to the bottom and get this ebook, 4 types of gaps. Guess how much it costs? Nothing. Come on, I don't need your money. I'm here to help you learn the markets for free. All right, so check out that. It's really nice. 4 types of gaps. Gap number 1. We're going to go with the bullish retest gap. Bullish retest gap. Now, this word is going to scare some people. Retest. Retest, aka the pullback, aka the retracement, aka the dip, aka the S curve, aka the rest, R-E-S-T. The only thing that needs to happen in a retest gap is that momentum needs to pause and chill out for a little bit. And instead of you buying at an aggressive high, you can wait for a pullback to come in on a bullish retest gap. Now, a bullish retest gap starts with a bull candle gapping up. That's it. Now, a retest gap is irrelevant. We do not care about the candle color that comes after the gap. What we care about is the candle that happens before the gap. Also, if you're wondering, I do teach this in depth again for free in video form. If you go to reallifetrading.com and click on here and go to the intermediate training, I mean, the information in there is unparalleled. It will change your entire life. It will give you so much distinction that you will be mad at me that you and I didn't work together years ago. The retest gap, bull candle gapping up. So this gap up simply means one thing. You have previous buyers. Those buyers are profitable. How do you know they're buyers? Well, because you have a ginormously huge bullish candle. Huge bullish candle means that there's definitely a large composition of aggressive buyers in that candle. If you have a large composition of buyers and the next day you get a strong gap up, what's going to happen? And better yet, how would you feel if you bought Spotify at 150 and the next day Spotify was planning on gapping up to 168? Most traders do what? They sell. They lock in profits. And rightfully so. There's nothing wrong with that, but you're capitalizing on a win. You're like, whoa, I'm making money. I'm amazing. This is awesome. So the retest gap means for me, it's a bull candle gapping up, which says that the buyers from those previous days are likely going to take some profits, and that profit's going to allow the stock to kind of chill out, rest, calm down a little bit. I don't have to be nearly as aggressive. I can wait for the retracement, the pullback, the S curve, the dip, and then I can start getting in on a position. So case in point, we have a white candle gapping up. Now, if you're looking at this chart, you might go, well, where would you get in? How would you know? And again, the beautiful part is it's the sentiment of the gap. It's literally the explanation of we had a bull candle. Here it is. That bull candle gapped up the next day. So those buyers in here are going to take profit. It does not matter what this candle looks like to help me understand and to know that when we get something like this, I will be a net buyer, expecting that rotation to come in, and then we can get a bounce. This is the dip, the pullback, the salsa, the retracement, the S curve, the rest of the retest gap, because that will be the difference and the distinction of potentially you buying here at 168.76 and me buying here at 165.95, essentially saving $3 on an order, because I am quite confident that we're going to have a really nice retest or pullback. So the next candle, look what we get. We get that retracement. We get the pullback. Oh my gosh, who would have known? This is such a crazy surprise. Wow. Yeah, I mean, it's pretty obvious once you kind of see it, once you understand it. And the best part is this could also have been a day trade opportunity. If you have a pretty good idea that you're going to get a retracement, you're going to get some selling, you could pop into the market and realize, okay, with this particular sentiment, I'm quite confident that we're going to get some type of pullback. And when we get that pullback, I'll be shorting and or I'll be looking to kind of buy a little bit of a dip. Now, when you're doing these types of gaps, it works in both environments. And since I'm here looking at the chart, I mean, there's so many great examples of this, but here's another one right here. So this is a bull candle on June 15th, 2023, gapping up. And again, the type of candle that happens after the gap is slightly irrelevant. You get the bull candle gapping up. And what do we get? This price action here is the rest, the retracement, the retest, the pullback, all the things, allowing you to get in cheaper and allowing you to wait a little bit. Because again, you're saying to yourself, since this is a retest opportunity, since this is a pullback opportunity, I'm going to be less aggressive. I'm not going to press the gas pedal as hard. I'm going to kind of chill out and let the momentum catch up and let the overall trend continue since I bought a dip. Most traders are losing money because they're buying too high and you are afraid of buying the dip. And the reason you're afraid of buying the dip is because you do not know if it's going to continue higher or not. But if you can add this part of the analysis into your repertoire of trading, you will have the timing down better and you will buy lower the more of the time. And if you're buying lower more of the time, well, guess what? You're going to make more money more frequently, because that's how you make money in the markets. You buy low and you sell high. I know it seems so easy, but it is. That's the best part. So you had the gap up, you had the retracement, meow, 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 and then we continue to have a really nice move higher where you're able to sell and lock in really nice profits. Okay, that's the bullish retest gap. Now, here on the screen, we actually have another type of gap that's also a retest gap. We have a profitable position gapping down, which is a bearish retest gap. So the bearish retest gap is a bear candle gapping down. So this bear candle gapping down is, again, irrelevant of the candle color that happens after the gap. The sentiment of a bearish retest gap is very simple. You have a prior profitable day worth of candles, a prior day of profitable bears. They were hanging out, they were having a good time, they were profitable, they're enjoying life. Then the stock gaps down the next day, gap action, gaps down, and then what do profitable bears do? In fact, what's the only way bears can exit a trade, regardless if they're profitable or not? There's only one way bears can exit a trade. What's that way? Buy to cover or buy to close. That is correct. So if you have profitable bears and the only way they can get out of a trade is by buying to close or buying to cover, you have a bunch of people buying, what happens to price? It goes up. That's going to be useful in just a moment. So what do we get? We get the retest, the retracement, the pullback. Instead of a dip, since you're in a bear move, now you get the rip, right? You've ever heard of sell the rip, buy the dip? All right. Well, instead of buy the dip, sell the rip, you sell the rip, buy the dip. It's just reverse, right? Sell high, buy low. Instead of buy low, sell high. You're waiting for the retest, which is the REST, the rest of this move. You're allowing it to calm down, to chill out. If you're using moving averages, maybe you're using an 8 or a 10 period moving average. Very often these retests will come into a faster moving average, a 10, 9, 8, something like that, before they continue lower. And so again, it allows you to go, all right, I'm going to play this position. And instead of shorting down here at, let's say, 142, you're able to short much higher. Because right now what you're doing, most likely, is you're selling short here. and you're holding through this retracement, praying to God, and then it goes down a little bit and you bail there for a very small profit. And eventually you get hosed where it just keeps going and going and going, and you exit for a loss, and that one big loss takes out all of your profits. That's what's happening to you, most likely. So if you don't do that, and instead, again, of shorting, as low as Hades, you're able to say to yourself, oh, wait a minute, I'm going to wait for the rest, the pullback, the retracement of a retest gap because, well, it's a bear candle gapping down, so I'm quite confident it's going to retest. And instead of doing that, maybe you got it halfway into that bear candle. So instead of 142, it's 146. That's a $4 difference. And look how quickly you're profitable. In fact, when it trades back up into here, there's actually multiple days where you could have taken a quick profit, because if you shorted on that day, you're already profitable the next 2 days. It dips below your short entry. And then, of course, you get a really beautiful bull candle there, and you get a good, beautiful bull candle there, and a little bit of support. You can, whatever, you get the point. It allows you to sell higher if you are playing a bear retest gap because you are aware of the sentiment. That's what I'm really teaching you in this video, the sentiment of how traders feel. Because your boy's been doing this. I got gray hair now. You guys ever seen my original videos? There's no gray hair in my video. That's how long I've been doing these videos. I'm getting gray, dog. That's crazy. I'm telling you, because this particular pattern is really, really profitable, and it happens extremely frequently, as in like every single day. Let's go check out a trade that happened on Tesla today. And Tesla was gapping down today and will continue to go lower from this gap, by the way, just letting you know. But it's no surprise to me that it's a bull candle today, because you had 1, 2, 3, 4 bear candles. 4 bear candles in a row. I should make this a nursery rhyme. 4 bear candles in a row. Stock gaps down to a new low. And then these bear candles do what? Those bears begin to buy, creating the retest. As Tesla buys, it will trade up into this little price action, and it will continue to go lower into really 150, because there's really nothing stopping Tesla from going lower. It's in a bearish trend as of right now, and yeah, well, there you go. It's going to go down more. But this particular price action, if I pop into, I don't know, a day trade example, and here's a 3-minute chart, would it have been helpful to know to sell it as high as possible? Because again, right now, if you're shorting, you're probably shorting in too low. So you're getting in here and experiencing pain, right, of small amounts of money and then holding on for a bigger loss. Whereas instead of getting in there, imagine, again, you play a little bit of a faster moving average and you're able to short much higher. If you're using non-extended hours, watch how this thing just fails the 10. Like I failed biochemistry. Look at that. Boom. If you're shorting into the moving average, it allows you for much better profitability because you're able to sell higher, ladies and gentlemen. The higher you sell anything, the more likely you are to make money. And the lower you buy something, the more likely you are to make money in the long run. This is how it works. So using these moving averages, using the understanding and the sentiment that, wow, we had a bunch of bear candles gapping down on Tesla, I'm going to allow for some retest to happen, saves you money. Instead of buying puts at open on Tesla, which is 164, you're allowing this to kind of retest a little bit up into 167. That's a $3 difference in the options. And you know how much options can likely move. So if you're waiting to get in on a bull day, on a bull candle, on an up day after it gapped down and traded back up into price action, you have extremely strong likelihood of getting in higher, which allows you to make money easier because you're going bearish. The higher you get in bearish, the more likely it is for you to make money, and vice versa. Let that sink in, people. It is that is it. That's the ease of this. Now, again, check it out, right? Bear candle gapping down. What do? We retest before we went lower. Oh, no, surprise. I mean, we can do this all day. It's really, really easy. Here's another example, right? Bear candle gapping down. What do? We retest it before we went lower. It's a constant pattern. It's almost massively, like here's another one. Bull candle gapping up. So these are the 2 types of gaps we covered, right? Bull candle gapping up. There's your retest gap. Bear candle gapping down. There's your retest. So frequent, this particular pattern. So now let's talk about 2 of the other ones, the ones I really like a lot. And this is a bearish gap and go. Bear gap and go is different. Because the bearish gap and go, I'm going to be a little bit more aggressive. Now, it can depend on the timing of my aggressiveness. It can be on the entry. Very, very often, I'm playing gap and goes on the day they gap. So I'm playing them as a day trade. That's how I generally play gap and goes. Now, sure, We can certainly play gap and goes on a swing trade level, but I generally play them on a day trade. So we're going to look at two on Palo Alto. This was the first stock that came to mind when I was wanting to look at this example. And here are two gap and goes. So this one was a bullish gap and go because the prior candle is bearish. Bullish gap and go. Prior bear candle is gapping up. And on this particular example, you'll actually notice on the 7th of February here, Palo Alto is opening above the high of multiple bear candles and multiple candles in general. So you had what? You had a really, really beautiful compression, consolidation, and then a nice gap up into the overall trend. That bear, this bear here, let's call him Bearimy. Was that too much? That was too much. Maybe my editor will take that out. No, he won't. So you have Bearimy hanging out down here, and Bearimy gets murdered because he gaps up the next day. Palo Alto gaps up the next day. And again, as I mentioned like 5 minutes ago, what's the only way bears can exit a trade? There's only one way. How do they do it? The way bears exit a trade is they buy to cover. So this dude's hosed, this dude's hosed, and these four guys are all sad pandas, which is a type of bear. So you have this gap up, really nice move, they're squeezed, and you get a nice push higher. That, ladies and gentlemen, is the bullish gap and go. And then, of course, the easiest one for everyone to understand is the bearish gap and go. The bearish gap and go simply means you have buyers who are trapped. You have buying candles that are coming into the position, and what happens? Those buyers get murked because they bought, the stock is gapping down. All the buyers who were previously profitable are now losing money. Buyers who are losing, they get scared, they get terrified, petrified, and mortified. And how do they exit positions? They sell. People sell when they're scared. You've done it. I've done it. My video guy Calvin's done it. We've all done it. It's okay. But that emotion, because you're like, oh no, I'm going to lose money. Oh no, I'm wrong. Oh no, I'm stupid. Oh no, this is out of my control. What do I do? That emotion can take over if you don't know what to do and you don't know how to protect yourself and you haven't done enough studying. So when you get a bearish gap and go, you get a buying candle gapping down, clearing supports, clearing pivots, because now those buyers have nowhere to run. They're scared and they begin to sell. And you'll notice you had one really, really nice day of selling. And then what'd you get? 2 days later, you had a bullish gap and go, trapping these two bear candles, trapping this bear volume. Those bears are now squeezed. Squeezed bears exit how? They buy to cover. So you have a bullish gap and go, and then runs into the 10 EMA. The 10 EMA goes, high wave, indecision, 3 days of compression, and poof, nice drop. I traded these moves right here on Palo Alto, and it was telegraphed. I mean telegraphed. Easy. Very, very simple. And if you're wondering, why in the world did Palo Alto stop on this day right here on February 21st? I'll tell you. There was a long-term moving average, the 200, right there. Moving averages. Who knew? They work really well. In fact, I'm going to make a video about that. If you have a request, how can I enrich and impact your life more? You're not hitting me up enough. You think I'm busy. I'm not busy. I just do this for fun. This is exciting to me. This is very, very enjoyable. I get jazzed up when you post in comment sections how I can help you with your analysis, with your charts. What can I do to help you? Post in the comment section below. Let me know how I can enrich and impact you more, what videos, what information, what content you would like to see this channel create. And make sure to go ahead and make love to that subscribe button with your mouse. Click the thumbs up. It looks a little bit like this, and I will see you in the next video. Thanks for watching. You rock.